AVV Nation, what's going on? It's Patrick here at VectorVest, bringing you a brand new video today, talking about one of the hottest electric vehicle makers of 2021. They just got some big news here today, so we're going to take a look at some of the headlines, see how that could impact the stock. We're also going to take a look at what VectorVest feels on it, and also take a look at the technical perspective of the stock as well, to see if this is a good time to buy, or maybe if this is a time to just be patient and wait to add it onto your radar. So without further ado, let's jump right into the video here today. All right, welcome back everybody. So today we're going to be diving into Lucid Motors. Once again, it's one of the hottest talked about electric vehicle makers of 2021. And so we're going to be doing a deep dive. First and foremost, I want to start off with the potentially bad that comes along with Lucid Motors, and then we'll dive into the good, and then we'll take a look at other aspects of the stock as well in just a few moments. But first and foremost, starting off with the merger. So if you're not familiar, Lucid Motors had a merger back around the middle of July where that merger gained them a lot of cash. Basically, it was a cash infusion, and that is where they went from struggling, barely able to make their ends meet, to having over about $5 billion in cash to keep the company going, to help with production, help with costs and expenses, and to make sure that they can stay on track and compete with the likes of Tesla or other big major manufacturers. So this is an article talking about the potential SEC probe into the merger, and that definitely is something that can be a cause for concern or cause investors out there to lose faith in the stock or be scared, and so they end up selling it, and that causes the price obviously to go down. So taking a quick look at it, as it states in the article here, it states that things could get rockier following subpoena from the SEC related to the merger. Regulators want to know about the relationship between Churchill Capital, which was who merged with Lucid Motors, and Lucid Motors themselves. And no surprise, it comes from an SPAC. A lot of SPAC talk over the 2021, and here we go again, ready to get into the SPAC situation. So that is something, if you're interested in getting into Lucid Motors, that you definitely want to keep your eye on for. See how this develops. So far, this may only be temporary, could create a good buying opportunity. And so therefore, if you're bullish on it, which we'll talk about the bull sentiment here in a few moments, this could be something that just passes or starts to die off on its own over time. But from everything that I've been able to find talking about the potential investigation or the subpoena for the merger, nothing seems to really be too earth-shattering that would really cause the stock to continue to drop even further from where it's currently at. But then again, it's still early on in the investigation, so there could be new details to come out in the future. But right now, things don't look too bad based off the subpoena information or that bearish information coming out so far. All right, so let's get into the good news. And this is something coming from their Q3 filings, talking about what they're up to, the new changes that they've made, the new developments to the company. And as an auto manufacturer, one of the key things you need to be aware of is production. This is something that plagued Tesla for quite some time, even still to this day. Production is something analysts and big money wants to see. And so far, Lucid, even though they haven't produced a lot of cars, we are starting to get word that they are producing cars. Finally, their first commercial production of its first vehicle, the Lucid Air, was started in September of 2021, and they delivered on their first vehicles in late 2021 or October of 2021. So therefore, they're finally starting to produce cars. And as an auto manufacturer and to make money, you have to produce a good to be able to sell it, to be able to fund your business going forward. And so the fact that they're starting production, albeit low production, is still a positive sign that they're actually starting to get their product out there, and that will help them generate sales and also continue to fund their business. And as we talked about, one of the big issues that was plaguing Lucid earlier on this year was the amount of cash available to them. Well, since that merger, as you can see here, $4.4 billion in cash came from that transaction or that merger. So now the company is flush with cash. They're able to keep operations going. So hopefully that can help them really boost their sales and get production ramped up to the levels that they need to be able to compete with other auto manufacturers. So positive signs coming from that front, because as an electric vehicle manufacturer, You have to have a product to be able to sell to make money. And that is one of the big issues with some of these electric vehicle makers over the last few months or last year or so, is that they don't even have any sales yet and their stock prices are already skyrocketing. So be careful with that. But the fact that they're starting production is definitely a positive sign and definitely a move in the right direction. And now, the last big news headline here for Lucid Motors that we have for you today is talking about the news that just came out today that Lucid Motors will now be included in the Nasdaq 100 index starting in 2022. This is great, especially if you're long or bullish on Lucid Motors, because now that's going to allow a lot of buying to come in to add it to those ETFs that track the Nasdaq 100. So you're going to see a lot of buying pressure coming in based off of this. And so therefore, that could definitely help push the price of the stock higher here. So keep an eye on this. This should definitely be a huge boost in the right direction for their stock price. And let's take a look at now the fundamental evaluation or the analysis that VectorVest provides and see what that can tell us as well. So we'll jump right out of here. And getting into the stock viewer allows us to analyze any stock out there. Starting off with some of the basics, we see the company's name, the symbol, the exchange, which if you see an X in the exchange, it simply means it's optionable. Then we get the price, the dollar change, percent price change for the day, and then we come to the value. Now, I know you see the value and you know the price of the stock, so before you get too nervous about it, let me just explain what the value is. The value is what we currently feel the stock is worth based on the current fundamentals of the stock, based on the current balance sheets and earnings reports. So right now, at this current time, the stock is only valued at about $3, where it's trading at about $38 currently. So therefore, there's a big discrepancy, and that means the stock is overvalued because the price is over its current value. Now, this value is not a projected value. Keep that in mind. And the reason we can see these overvalued stocks in the market is because people are willing to buy that stock knowing that they're paying a premium on the expectations of where they're going to be in the future. So just because the stock is overvalued doesn't necessarily mean it's a bad thing. All right, now getting into the key fundamental analysis here. As always, VectorVest proprietary indicators are going to be cast on a scale of 0 to 2. So above 1 is good, below 1 is bad. Looking at RV or relative value, this is looking at the long-term potential of the stock over the next 1 to 3 years. So right now it is below 1, currently at 0.13, telling us that there has poor long-term potential over the next 1 to 3 years. Now, this is based off of the historical data. And as we know, Lucid wasn't really building any cars up until just recently, and they were losing a lot of money up until the merger, which gained them a lot of cash on hand. So this is going to be more of a speculative play because they don't really have a consistent, strong balance sheet except for that cash on hand. Then the next indicator is the RS, or relative safety. Now, this is the amount of risk involved with the stock. Well, since they just started producing cars or getting production started, there is a lot of risk. They're at the early infancy stages of where they want their company to be. So based off of these two indicators, both being below the level of 1, that tells us this stock is still a speculative play currently. And I think we can all agree with that. You know, up until the merger back in July, everybody was bearish on it. The stock was having a hard time going up on a single day. So yeah, I think we can agree that this stock still at this stage is speculative, but there's good prospects potentially in the future. And then the third indicator is the RT, or relative timing. This is looking at the short-term price trend of the stock. So since it's below 1, this indicates that the stock is in a short-term uptrend, albeit a weak one. So overall, right now, the stock is not favorable. Well, let's go take a look at the graph and see if we can get any sort of sign from a technical perspective on what's going on, or if right now, based on the charts, is a good time to be looking at it. So I'll go ahead and right click, pull up the stock graph. And as we can see, Lucid has gone from about $20 a share just a few months ago, all the way to a high of about $55 to $60 a share. A 3-timer in a very short period of time. So there is a lot of volatility based off of what we see currently. Well, the markets have been selling off. Lucid has been no exception. We've seen Lucid going down just with the overall markets as well. If we zoom in a little bit, let's take a look at what our indicators are telling us. So before we do that, let's go ahead, make sure everybody's on the same page. Well, we have a 3 and the 8 exponential moving average, which help indicate short-term direction. We're seeing price shown in candlesticks. And then below there, we have the DPO standing for the detrended price oscillator, the stochastics, which is a great overbought, oversold indicator, and then MACD here at the bottom. So starting off with candlesticks and taking a look at what the chart is telling us. First and foremost, as always, we like to look at volume down here at the bottom and then look for the big spikes in volume, and that can help indicate which candles you should be focused on. So as we can see, the big down day here was on higher volume relative to what we'd seen previously. But then the next day, we started noticing a doji, which shows indecision, meaning investors are not sure whether or not the stocks should keep going down or whether or not this is a good buying opportunity, whether they should be jumping back on board. So then today's news comes out. The markets are blood red right now, but Lucid's up nicely, up about 3% off the news that they're going to be included into the Nasdaq 100 starting at 2022. Now, based off stochastics, stochastics is a great overbought, oversold indicator, but as I always state, stochastics can stay in that overbought or oversold territory for quite some time. Well, on a short-term basis, we did get into oversold territory, suggesting that upside potential outweighs downside risk. So what we're looking for on a short-term basis to see if this stock is starting to recover and turn back around to make a second run, we want to see the stochastics start to come out of that oversold territory, or another way of looking at it, seeing stochastics cross above that level of 20 again, as well as seeing DPO turn into positive territory, because DPO is a momentum indicator and it oscillates around that zero line. So above zero would show the short-term trend is up. Below zero, the short-term trend would be down. And looking here at MACD doesn't really tell us a whole lot. Just shows that the downtrend may be starting to dissipate a little bit as of today, because this histogram is the difference between the MACD line and the signal line. And as we can see, the histogram is starting to shrink a little bit, which tells us the MACD line and the signal line are starting to converge, which suggests that downside momentum may be starting to dissipate. So from a short-term perspective, I like what we're seeing here. We have the doji, which could be a potential reversal. We get the update here today, which is confirmation of that potential reversal. Now, what I'd like to see for a great entry point from a more prudent standpoint is seeing the 3 and the 8 turn positive, seeing the DPO turn into positive territory, and also seeing stochastics starting to come out of that oversold territory as well. Those would be the 3 indications I'd be keeping an eye for to look from a short-term perspective for a great entry point. As well, you may want to make sure that the market's moving in your favor, so that way you have the wind to your sails. And what better place to know if the market's moving in your favor than utilizing the VectorVest system. So if you don't have the VectorVest system on your side, make sure to click on the link down in the description below and sign up for the trial right now. So if you've enjoyed today's video, let me know your thoughts down in the comments below. Let me know your thoughts on which electric vehicle maker you think is going to be the biggest mover come 2022. So until next time, take care, adios, and toodles.
Hey everybody, Glenn Tompkins here from our YouTube channel, and today I've got such a really good deal for you. Are you actually ready to transform your portfolio? And if you are, then you're ready for the 28-day portfolio challenge. In this challenge, we're going to show you how to have the bad stocks removed from your portfolio. We're going to help you to know which are the best stocks to buy, and the most important thing, we're going to help you to know when the right time is to buy them. And folks, this challenge is absolutely free. Yes, you heard that. Absolutely free for 28 days. Now, as I go through this, I want to show you there's 5 steps to making this happen. Step 1, become an expert at stock analysis. We're going to teach you a tried and true way to help you to truly analyze a stock. We're going to help you to know when to sell and weed the bad stocks out of your portfolios, the ones that are hurting your portfolios. And then we're going to teach you to know when to buy and put probability on your side, not just buying because someone said to just buy a stock. Step 4, we're going to show you how to know what to buy and cherry pick the best candidates to help you to consistently make money. And step number 5, which is going to help to simplify your day with a 10-minute management plan, managing all of these things within 10 minutes a day. So what you do is when you're ready, you click on sign up today. It's going to take you to this link right here, your VectorVest order. And I want you to know something. This is free. It's a $475 value that we're going to walk you through for 28 days. What else do you get? You get access to the 28-day plan. You get live training webinars on the 5-step successful investor system, step-by-step videos. We're going to give you action items to complete for each lesson to help you to implement what you've learned. It's called practical application. Live Q&A sessions. We're also going to put you into a private Facebook group, and then on top of all of that, fun activities and giveaways, because learning should be fun too. So again, we're going to show you how to get the bad stocks moved out of your portfolio. We're going to show you how to draw a line in the sand on all the remaining stocks to see which ones bypass that or whatever. A list of stocks you'd be willing to buy when the time is right, a daily plan to manage your portfolio, and confidence that you're in control of your investments. If you're ready, folks, click the 28-day link here or go to www.vectorvest.com/28. We hope you see you there, folks.
Yeah.